As expected earlier, traders are setting the market in motion in the first trading week of the year. Flooded by macroeconomic data, they have an excuse for vigorous activity. The highlight of the week is the official US employment report, which is due on Friday. And let's discuss this in detail in our video calendar on InstaForex TV channel. Apart from the US statistics, there is some macroeconomic data from the Eurozone in the first trading week. Traders are still pricing in the differential in the rhetoric of the major central banks. So the euro-dollar pair has been wound down by the Fed's intention to struggle against the soaring inflation and raise interest rates 3 times this year. Unlike the US Fed, the ECB aims to pursue the same ultra-loose monetary policy despite inflation acceleration in the Eurozone. On Thursday, January 6, Germany will release the preliminary consumer price index for December. The CPI is expected to slacken its pace a bit from the highest level in the last 19.5 years. Importantly, the current rates are way above the target level set by the ECB at 2%. The market is sure to give a bearish response. Germany's inflation data is published before the CPI report for the Eurozone that is due on Friday. Hence, this data will have a more serious impact on the euro-dollar pair. Before the US non-farm payrolls on Friday, traders will monitor a weekly update on unemployment claims. These figures have been going down week after week. Thus, market participants have proof of a recovery in the US labor market. In addition, on Thursday, investors will take notice of the services PMI by the Institute for Supply Management. The consensus suggests a decline in business activity in the United States service sector. Last time, analysts predicted a slowdown for the November PMI, but the actual index rose sharply to a historic high, defying expectations. We do not rule out the same scenario this month as fresh evidence of positive trends in the US economy. And the economic calendar on Friday is jam-packed with important economic data. Early in the morning, traders will find out a flash CPI for the Eurozone. Consumer prices for the euro area's countries are projected to show a downtick to 4.8% in annual terms. The projected figure for December is twice higher than the ECB target level. And the monetary authorities still insist that soaring inflation is transitory. Nevertheless, traders do not share this optimistic viewpoint. That's why fresh evidence of inflation acceleration becomes an excuse for selling the euro. And later in the trading day, the market will be overwhelmed by positive sentiment on dollar-denominated assets after the publication of the US Labor Department. The US economy is expected to create 410,000 jobs, excluding farm employment. The jobless rate could have dropped to 4.1%. A few hours later, market participants will rush to buy the US dollar, following the market rule: buy the rumors, sell the fact. And after the non-farm payrolls, traders will lock in profits and we will see a minor retracement in the US dollar. However, this scenario will be implemented in case the forecast comes true. Let me remind you that the actual employment growth in November was much weaker than in the consensus. And we will monitor the market reaction to the above-mentioned reports. Subscribe to our channel and follow changes in market sentiment with us. Any comments, questions and offers are welcomed. We wish you profitable trading and see you soon.